Good day. I am Isaah Monthly, the Chief Economist at Alexander Forbes. I'll be speaking about markets and economic review for the month of April and where markets are likely headed next. Developed markets reported stronger economic growth figures in the first quarter of 2019. The US grew by 3.2% year-on-year from 2.2% expansion in the fourth quarter of 2018. And China rebounded through the first quarter with gross domestic product rising by 6.4% year-on-year. Robust growth figures from advanced economies eased fears of a potential US recession and a slowdown in the Chinese economy after major institutions such as the International Monetary Fund and the World Bank downwardly revised the global growth forecast for 2019 and 2020. Dovish central banks and promising GDP figures from the EU, China, and the US positively impacted global markets in April, adding to the strong market performance we witnessed in the first quarter of 2019. Key central banks continued with their soft interest rate rhetoric, with the US Fed, the Bank of Japan, and the European Central Bank reaffirming their dovish stance by leaving interest rates unchanged but keeping the door open for possible hikes before the end of the year. Trade protectionism remains the biggest risk to the global economy, as US President Donald Trump threatened the EU with import tariffs, simultaneously with the start of trade talks between the US and Japan. In the UK, Brexit uncertainties somewhat subsided after Prime Minister Theresa May was given a 6-month extension until the end of October 2019, which followed a 2-week extension that failed to yield a trade deal. Brent crude oil prices rose to a 6-month high of $75 per barrel, driven by US sanctions on Iran and strong GDP figures in the first quarter of 2019 from the US and China, which softened fears of a global growth slowdown. Locally, the FNB BER consumer confidence declined to a low of 2 index points in first quarter of 2019 from 7 points in the fourth quarter of 2018, largely driven by negative sentiment from load shedding and prolonged labor strikes and rising fuel prices. South African consumer price inflation increased to 4.5% year-on-year in March, up from 4.1% year-on-year in February. It remains firmly within the South African Reserve Bank target range of 3 to 6%, which supports the current sub-dovish stance. Local equity markets remain constrained given the weakness in underlying economic activity, with a constrained consumer sector and Eskom load shedding negatively impacting on business operations. The May 8 national and provincial election outcome is broadly as expected, with slight shifts in voter preferences. The ruling ANC obtained 57.5% of the national vote, which is roughly 4 percentage points lower than the 2014 national elections support, but higher than the 53% which it obtained in 2016 local government elections. The ruling party retained its majority in all provinces it governed before the elections, but Gauteng's majority, just over 50%, was the lowest the party has obtained since 1994. The DA obtained 20.8% of the national vote and retained its majority in the Western Cape. The EFF, which is the third largest political party, increased its support to 10.8%, which is some 4 percentage points from the 6.4% it obtained in the 2014 national elections. It obtained the official opposition in Limpopo, Northwest, and Mpumalanga. Worryingly, voter turnout declined to 66% in 2019 from 73% in 2014, with a decline attributed to the youth. Broadly, the outcome is good for political stability and policy implementation, depending on the following. First, the cabinet that will be appointed soon after President Ramaphosa is inaugurated on the 25th of May. Second, the size of the cabinet and its policy orientation insofar as key issues like Eskom restructuring and the energy sector, expropriation of land without compensation, and water rights in agriculture, and the management of state-owned companies such as the South African Airways and the SABC. Markets' reaction is broadly positive, and we expect them to continue in positive territory post the cabinet announcement. But obviously this depends on the global environment insofar as it continues to support emerging markets. That's it for now. I'm Isaah Monthly, the Chief Economist of Alexander Forbes. Goodbye.